So taking on, as I mentioned, will make this fun and learning combination, and that makes me head towards the second quiz question for all of you. So stay quite alert and ready for this thing. As soon as I ask the question, I want one of you who knows the answer to come up on the stage and answer. So the question, are you ready? Yes? All right. So the question is, as we are trying to understand the startup ecosystem, and we all know there are a lot of jargons in the startup ecosystem, and there are a lot of terminologies. So the question for you is, what is burn rate? What is, or how can you define burn rate? Don't raise hands. I'm not allowing anyone or anybody. If you know the answer, stand up, walk up to the stage, and just answer. We just have 5 seconds. Anybody who can answer, what is burn rate? Right. Wow. A round of applause for him, please.
Hi guys, I'm Shubham. The burn rate means how much you're burning month on month. Basically, your revenue minus your expenditure.
Okay. Anybody who has a different answer to this? Or would like to add on to this answer? Great, great. Please. Round of applause for him as well, because it's healthy for you and inspiring for him. Yeah.
Hi, this is CA Yash. So of course, we need to know what is burn rate. I'm the founder at FarmSay. So burn rate is basically what a startup is losing money in terms of money every year. So there is revenue and there is expenses that a startup does every year. So if your revenues are revenue minus your expenses, the expenses are more than revenue. Say your revenues for the month is 10 lakhs and your expenses for the month, including your cost of goods sold, is 12 lakhs with the fixed expenses. So you're burning 2 lakhs every month. So that is the burn rate.
All right. Great. So both the answers were nearby similar to each other and very well explained. So I would like the first person who explained the answer to please come up on the stage, and would like to, and I will also welcome Richa to please come up and award him with this prize. Great. So moving ahead and taking further the discussions and the topics and the learnings, as we all agree, India has a thriving startup ecosystem, and hence there is a growing need for more founder-turned-investors who can help support the next generation of entrepreneurs. Founder-turned-investors bring a unique perspective to the investment landscape, as they have first-hand experience of what it takes to build and scale a successful startup. They can provide valuable insights and mentorship to early-stage founders and help them navigate the challenges of building a business. In addition, they can also bring a more empathetic and supportive approach to investing, which can be especially beneficial for founders who are just starting out. So let us understand more with our next set of panelists for this topic, and I would like to call all those panelists, and I would like all my dear audience to please welcome them with a round of applause. Mr. Munish Bhatia, co-founder of India Accelerator. Mr. Alok Mehta, Investor Relations at Bloom Ventures. Mr. Taran Bedi, Investment Banker of Dexter Capital Advisors. Mr. Girdhar Malpani, Founder of Climber Capital. Mr. Mrunal Jhaveri, Founding Partner at ICE VC. So welcome all of you esteemed guests, and I would also like to welcome the moderator for this particular panel, Mrs. Yamika Mehra, whom we have just heard and shared her insights. So thank you so much, and over to you, Yamika.
Hello everyone, thank you so much for waiting up for this one. Actually, this is a very interesting one. So yesterday, when this event was thrown open, the co-founders of Ivy, they said something interesting. So as you all know, this is the second season. So last year, जो founders थे, जो exhibitors थे, जो pitch कर रहे थे, Apparently this year they are on this side of the stage, which means that they are sponsors and they are investors and so on and so forth. And so that is actually the topic for our panel discussion. Hello everyone, my name is Yamika. I'm here on stage once again in front of you. And it's very exciting for us to understand what happens when founders become funders and investors. So that's what we are going to talk about. I hope we are able to give you some good insights into it. How soon can you climb that ladder, and how can you live that journey from this side or one side of the table to the other side. So I have with me an esteemed panel. I would actually request each one of you, starting from you, Taran, maybe to introduce yourself very quickly to the audience, and then maybe we'll start taking questions.
Yeah, hi. Yeah, hi. Good afternoon, everyone. I'm from Dexter Capital. So I've been an investment banker since the start. We help companies. We are early stage investment bank, right in the top 5 banks representing companies. We have helped companies like Dehat, Sleepy Owl, Arata, Prozo, Milo. So our thesis is we would like to work with strong founders, help them no matter what. We hustle for our founders, get them the best deal and at the best terms. So yeah, so looking forward to the chat.
Taran, before you pass on the mic, one question. Any founder who has turned investor, any founder that you know or you invested in who has now turned investor, if you would like to share with the audience?
So yeah, so few of my clients, my founders, they have themselves become like angel investors, and they are like with their, so they understand business, right? So hota kya hai when you are on that side of table from a VC or a private equity perspective, I feel that is changing now. You don't sometimes understand the essence from the root level versus from a root level, but all these angel investors or family offices, they understand कि कैसे एक business build किया जाता है early days में. So there are a lot of my clients who actually they invest through us. So yeah, we do.
Okay, okay. Thank you. Moving on to you, Mrunal. Please introduce yourself and do tell us about one founder turned investor story, if you have it.
Hi, my name is Mrinal. I am from ICE VC. Prior to this, we had our own startup called Your Guy. We were in the last mile bulk delivery. We got acquired in 2017. And since then, we've been investing in startups. We've done about 70 plus startups. I can share the profile with you on LinkedIn because the list is long. I think one of the startup founders that I know recently who has become an angel investor is another portfolio company founder called Madhav, who was to be here today. I think he's not there. But he started investing, being a founder. So that's the
Mrunal, you
guy.
yourself also seem to be a founder turned investor. You just told us you had a startup, you sold it, and then you started investing. So great, thank you, great story.
Hi everyone, I am Munish. I'm one of the co-founders at India Accelerator. First of all, I would like to thank IB Growth and people of Surat to invite us here. Great event. We are a seed stage accelerator. We are based out of Gurgaon. We started 5 years back. We provide mentorship, business connects, and fundraising to early stage startups. We have a couple of funds, category 1 and category 2. We do small investments from 100K to 200K from our angel fund, and probably up to 500K from our Cat 2. We have a portfolio of 200 startups. Just to share a little bit about that, I think there are a lot of founders who have raised funds or who have grown, have now turned into investors. In fact, if you see Shark Tank, they're actually the founders or entrepreneurs who are now investing in these startups also. So we are seeing that trend within our community as well. We have a community of almost 300 founders, and some of them have now starting as angel investment themselves. So they bring in a lot of experience and perspective because they have gone through that journey. So it's not just the money that they are bringing on the table, they are also bringing their experience. And early stage is quite difficult for founders to go through. There are a lot of challenges, and if there is someone, a mentor, who's helping you go through that journey, that becomes really amazing. And at the same time, if they are putting money, that means they are giving more than just their time. So that's my initial thoughts.
Thank you so much, Munish. Alok.
Hey, hi everyone and a good afternoon. I'm Alok Mehta. I represent Bloom Ventures. We are one of the most active venture funds in India. It started out in 2012. And I use the word started out because our founders, Karthik and Sanjay, pretty much operated and thought like a startup, and we continue to do that, which is very relevant to the discussion we are having here. As a firm, we manage more than $600 million in assets, and we are investing out of a fourth fund now, invested across 150 portfolio companies. Now, interestingly, we have seen a very clear trend that many startup founders are angel investors. They are helping the ecosystem a lot. And globally, I mean, of course, there are very good examples like Mark Andreessen of Andreessen Horowitz, etc. One interesting story I would want to share here is an investor becoming a founder. So we had a team member, and we have had quite a few team members who have gone on to the other side, who wanted to start up despite being an investor themselves or being clearly on an investor path, on investor track. But they chose to start up and become a founder because that is where most of the excitement lies ostensibly.
Okay, so we've got people going to the other side as well. Alok, if we can keep the mic with you, I'd like to ask what changes when a founder becomes a funder. So I was just, looking at some list in preparation to this session, and I looked at a list of top 10 angel investors in India, and guess what? All 10 of them are startup founders, starting from Kunal Shah to Kunal Behl. So what changes, Alok, and I'll come to each of you to ask this, that when a founder becomes an investor, is it any different than like your regular investors who are just investing?
Yeah, Yamika, the answer is a bit nuanced because obviously you have, for example, a founder who is an angel investor now. He's investing out of his own, pool. He's spending a lot of his own time. That is where the actual investment is. He's mentoring, he's helping, he's sharing the journey of the founders. That is one part. At the same time, people like us who are managing other people's money need to also wear a very clear fiduciary approach, right? Because we are responsible to deliver returns and see the investments of someone else being protected. So the lens that is to be applied when someone is like a founder investing out of their own resources, out of the sheer support that they want to show to the ecosystem and the desire to contribute, which is the key motivator, as against a professional investor or investment house, which again could have started out really small, build along its journey, but at the same time needs to be mindful of the responsibility to its own investors. I think that is where the key difference lies.
Absolutely. Munish, if you'd like to add something, that what more does a founder turned investor brings onto the table?
I think a lot of things changes. One is definitely, they understand the founders, the new founder who they are investing in more in terms of, what they are going through. So, as Arjun was mentioning just before, you need someone to, talk to, you need a mentor. And if someone has gone through that journey, they would be, more interested to, give you a solution or tell you the perspective. It's not always the solution that they're offering, but also that, how to go through that journey, Founder journey is very emotional at times. You are going through a bad time. Either you're not able to raise funds or you're not getting the right business. You want to pivot. So at that time, if someone who has gone through that, couple of times or more than that in their journey, you will always get that perspective. And founders bring their own network also because they have done a lot of fundraising, right? They have a big network in VCs. So if they are investing their money, I'm sure they will also open up their network going forward. So a new founder is not just getting a mentor, an investor, but a network of VCs also, right? So I think it's a win-win for both of them. One, they are earning money. Second, the founder is getting all of that they require. So it's similar to what an accelerator is doing at an institution level, right? We have almost 1,600 angels. Most of them are CXOs and founders also. So they bring that expertise. But at the same time, an individual is doing it for that founder, right? So you get that network, and it's very difficult sometimes for new founders to get into the VCs and understand where to go, which to present, what kind of numbers they should ask for, what is the valuation you should ask for. So these are few questions who no one would answer for them, right? Uh, this person can be that mentor for that case.
Correct. That's actually a very good point that founders can be very good mentors for these new founders. So Mrinal, like we were discussing, you yourself have been a founder and now you are a prolific investor both on an angel level and on a fund level. In your sense, do you bring extra onto the table and how do you win deals over all other investors?
So I think there are two key aspects to it. One is the entrepreneurship skill set that we bring to these founders, because most of them sometimes they don't know when they're starting out, how to start out, how to raise capital, which is the key thing in the startup funding scenario. So we bring that, and second, while building the startup, we also bring a lot of empathy towards these founders because we understand what it takes to build a startup and what is the road that we have taken during our startup days. So I think these are the two key points that I feel.
Okay, so you're saying that if any of us are raising funds here, we should prefer you over others.
Not be everyone, but
Okay, great. Thank you so much, Runal. So, Taran, I mean, today we see there are funds that are completely backed by startup founders. I mean, the thesis of the fund is that it will be founder backed and founders will bring in the deals. Yeah.
Founder friendly.
So do you see that in your line of work? At Dexter, do you see that a lot of founders becoming LPs, becoming founders in funds, or do they prefer to invest directly?
So the way I see it, firstly, that why these investors, they are turning investors is like they see ki a lot of them when they started, they were not given the access to capital wasn't that much, right? So probably they feel that it's very important for the ecosystem to develop. So, and there is some kind of empathy these guys have for them. Eventually everything is financial returns, but they feel कि एक धक्का लगेगा because they feel कि उस समय उनको नहीं back करा है, and that's why they want to bet them on very starting levels. But yeah, a lot of them are turning LPs also. They are coming in, they are investing with us on our venture side. I'm more on the investment banking side. But yeah, you rightly said that these guys are also now people who have made big bucks, they want to come as LPs also.
Right, right. So, I mean, एक circular economy भी चलती है, right? I mean, you make money and then you invest it back into the ecosystem, and that's how it goes on. But there have been some not so good stories about founders turning investors as well. I mean, so Munish, Alok, I'd specifically like to hear from you guys. Are there any cons of founders turning investors? I mean, because we see that founders who've raised Series B, Series C, now they've got some money, they just immediately go out on a shopping spree and, they're investing left, right and center, building their own personal profiles. I mean, what is your take on that, Munish, Alok? Maybe we can start with Munish.
Yeah.
Yeah.
So I frankly speaking, don't see a lot of cons for the new founder, but for the founder himself who's turning into investor. So if they are already working on a problem statement and they are still starting investing, see, there's a lot of time it takes to, evaluate a startup, meet a founder, and, constantly invest in money and time, right? If you have a full-time job as a founder to take care of your own company, then you're somehow compromising on that. Especially for founders who are doing like 30, 50 deals a year, right? I look at almost 2,000 deals a year. I know how much time it's required to evaluate and go that. So if you are doing it while that's not your full-time job, then you are not doing the right thing for your investors, right? But for a new founder, it makes sense. Like, all 3-4 points that I mentioned in terms of network, mentoring and investment, it works for them. So I don't see that's a challenge. A founder who is turning into investor, they have to decide how much money and time they want to take out from a primary thing. Like the founders who are now setting up an institution, I think that works beautifully, right? Who are now doing it full time because they have experience, they have money, why not, right? But if you have a primary job, I would like, them to focus mostly on that, probably 90% of their time, not more than that.
Absolutely, absolutely. Yeah. And as Bloom, Alok, you'd want your founders to become investors or they're better off as founders?
So Yamika, interesting point that we have always maintained that the cycle will get completed as you rightly said, right? When the founders in whom we are investing become LPs into us. And that has already happened quite a few times now, right? But coming to your question, now there is an obvious criticism that, a founder who is investing in other businesses could be distracted, and that's right. Their energies and time should be focused on scaling up their own businesses, which is a common criticism that we have. But we need to bear in mind that we are a very early, or rather very nascent ecosystem of startups in India that is getting built, right? And here, the mentoring, the experience, the sharing, or even acting as a soundboard, right? Acting as the 11 p.m. friend to whom you can call and share your problems with is a very important component of building that ecosystem for younger founders to come. So I feel it is all good and great if this is happening, because it adds to the strength that we are building within the country by way of our startups.
Okay, awesome. So I was told to keep this brief, and let's conclude it here by saying that it is great if all of you can come from that side of the table to this side and start investing, but probably you'd like to invest by becoming LPs in funds, or after you've wrapped up your own business, sold it, got acquired, etc. Like Arjun, we have a great example. That's when the best time you start investing. That's when you'll be able to give most. So thank you so much, all of you, for being here. Really appreciate. Thank you for your valuable insights, and hope to see you around. Thank you so much.